Is your wealth strategy a job or an investment? Stay tuned. Welcome to this week's edition of NoteSchool TV. Well, where every Wednesday at 11:05 Central Time, we bring you the most amazing guests, which again we have today, as well as the most amazing content. And so this week is absolutely no different. So you'll look forward to meeting our guests in just a second. Before we get started, let's do some housekeeping. Number one, make sure and, hit that like button. Yep, go ahead and hit that. Let us know that you're liking what you're seeing there. And number two, make sure and subscribe to the NoteSchool TV channel if you have not already done so. And number three, hit that bell notification. Yep, bing, hit that so that you will know, well, you'll have fair warning as to when we're going live when every Wednesday at 11:05 Central Time. Make sure and keep those comments and those questions coming. Eddie and I love to hear from you guys as far as what's going on in your market. What do you think of the episode that we've just done? And just, keep in contact with us. And then last but not least, if you would like to know more about what we do at NoteSchool, simply go to noteschool.com/TV. Again, noteschool.com/TV. And with that, I'm going to bring on, let's see, NoteSchool's founder, our chief visionary officer, all-around good guy, Mr. Eddie Speed.
Good morning.
Well, how are you today, sir?
I'm good. We are entering a new month, a new chapter in the year of 2024, and we are pretty fired up. Our activity level in our industry has continued to go up this year. And actually we've jumped a pretty sharp little spike up right now. And we're excited about that. We always say that we tend to do good when the banks are pulling back. And that seems to be a pattern. We're going to talk to our guest today about what their passive strategy is, and is it a job or is it an investment? So we'll do that here in a minute.
Yeah. Well, let's bring up the news, Eddie. So we have got from Housing Wire, pulled this actually this morning, the weekly housing inventory data. And Eddie, they're saying here first that for the week of, August 23rd through the 30th, that inventory fell. And Eddie, I did that math and it fell a whopping 409 units. Wow.
Well, it's a headline, Joe. So if a man just reads the headlines, he says inventory fell.
That's right. And then we look at the same week last year, inventory rose from 503,924 to 509,962. That's about 5,000 units. But look at the all-time low there, which was in 22.
Joe, we might could say on the first two, virtually unchanged.
Yes. Yeah. Yeah. And actually last week was that was the height for the year. Asking listings or the active listings in 2015. Look at that. We're 1.204 million. So, yeah. And then I did throw in one other piece here, and this is just a graph showing where we are here. And we look at that red graph right there for 2024. 38% more than last year.
I'm hearing it all over the board.
Absolutely. Florida is the leader. You would have seen that last week, guys, on our monthly update, up 71%. Inventory is up 71%, whether they're listed or new homes or whatever they are. Yeah, it's coming up.
Yep, we are monitoring it. We're not feeling like there's a crash, or we're not calling anything like that. But we're definitely monitoring it and paying attention to what it's saying. So,
well, things did need to change just a bit, and we've got a big month with the Fed and all that. So we'll just see how it plays out here, but we're on it.
I would say that the bets are that the Fed's going to drop the rates a little bit.
A little bit. So big month. So Eddie, I am going to, I'm gonna drop off here, let you bring on our guests, and you guys have a great show, and I'll see you on the back end there.
Awesome. Thank you.
All right.
Well, our guest today, I'm really excited to have this couple has really become friends of ours. We've known them now for many years. We've watched them implement this note investing strategy over the years. I'm so impressed with them because really of their lifestyle, they're deciding what they want out of life, and they're making that happen. And part of that is that they pick a good investing strategy that's allowing them to do that. They're very sweet people. They're very giving people. They are definitely go-givers for their area, where they live, and really to our industry. So you guys welcome Brian and Cindy Lagree.
Hello, everyone.
Good morning.
Good morning.
Good morning.
How are you guys?
Great.
Great. We got a break in the weather, and life's a lot better when it's 80 degrees.
Yes, it is actually cooled off here in Texas as well. We may get back up, but maybe not in the 108s anymore. But glad to see you. Looks like you're in your living room hanging out.
Yep.
We are.
Yeah, we are indeed.
That's awesome. We are glad to have you. I said you've been with us a long time. That's a pretty long time since you started with us, isn't it?
It has indeed. We started in
2015.
2015.
Coming up 9 years. We passed 9 years. I guess.
So we jumped in, and it's been a great experience.
Well, I really respect you guys. I respect you so much that you seem to have. So many people get to a certain age in their life, and his life isn't doing what they want. And no life's perfect, right? But we do have some choices as to how we finish. And you guys are finishing well.
Thank you.
Well, thank you. It's really, from the way we see it, we all have decisions that we get to sculpt the life that we want, and it has to be age appropriate.
Yeah, it does. I agree with that. And I know you guys do a lot in your little area. You're around Kansas City, right?
We are.
That's right.
Awesome. You guys had tremendous corporate careers,
Mm-hmm.
right? So you were very successful when you were working. And I've had a lot of dealings with you guys, and I can see why you were very successful working, because I've seen how intelligent you are and what smart questions you ask. So you guys tell us a little bit about what you did before you got to Note School and before you essentially retired.
Okay. I'll start. I worked in, my background's in accounting. So after public accounting, I spent about 34 years working for a mutual fund investment company, and I worked on the institutional side. So my career was really built around traditional investing, and
Yes,
loved it.
that's awesome.
And I started out in accounting, but very quickly found out that was not going to be a very good path for my success. So I jumped over into law school, and then had my entire professional career in law, mostly with real estate finance and business transactions.
So you guys got to go see business at a very high level.
Mm-hmm.
And it influenced some things that you said, okay, in our personal life, we're gonna be very focused in some areas and stuff. The title of our show today is Wealth Without Walls. Now that's a little bit catchy because we're talking about physical walls, right? Like as in rent houses. It could be walls as in barriers. And so maybe it has a double meaning. Our marketing team did a pretty good job of naming that today. We're going to talk about what that really means. And the subtitle to it really is the passive income portfolio. So I know you guys have done a lot in notes, but today, just share with our audience a little bit like how it was starting, and let's talk about like the passive notes that you've bought and like where that's taken you and why you went there.
Excellent.
So, first of all, just a little bit of a journey. Talk about your first experience with Note School. What'd that look like?
Well, our first experience was actually in a 2-day class. I received an ad for it, and I was intrigued by it. We both went. I went because I wanted to learn more about it. Cindy went to make sure that I didn't do anything or commit to do anything we weren't ready to do.
I love that.
And I think we were both very skeptical at first with the whole idea, everything about it. And I remember so well, though, we were at lunch together the very first day of that 2-day class. And I remember I looked across the table at Cindy and I said, "We can do this." And we did. We did. And we've not really looked back. We've been really pleased that we jumped in with both feet and just have really enjoyed that experience.
That's great.
At that point, we were still both working, but it wasn't long after that we both took early retirement and kind of jumped in on this. So,
yeah, that's awesome. Well, I think, I think people show up sometimes for a class and they are, it's not inappropriate, but they're a little skeptical. They want to see who we are. And, they say the truth has a crystalline ring to it, right? And I think what we try to do in the class is we don't try to do anything different than what we do. And you guys have coached with us for 9 years now, right? It's just to go be very plain spoken about the business and the risk management. And, a lot of people come over because they've been invested in some other things, rent houses and syndications and other things like that. I want to talk about your loan portfolio relative to your passive portfolio, your performing notes. Like, give us a sense of what that looks like.
Well, we have probably the greatest percentage of our notes are performing. And so we watch the activity on it. It doesn't take a whole lot of effort to just double check to make sure that the payments are coming in and that they're on time, and then that we're getting the money from the servicer and as we should be, and that. So the performing notes are really pretty easy.
Yes, they are. And once again, remember, guys in the audience, they've been with us 9 years. They can do anything they want to, right? They've become very sophisticated note investors. So you guys have bought other notes, but obviously somebody that's just beginning, they're like, okay, well, I don't know, I have enough confidence to do all that yet, or I'm not sure how that works. And so I just know, Cindy, that most everybody that we talk to, when you have a performing portfolio, it's not much of a job, right?
Right.
No, it's not. And
it's perfect.
As we've already explained, we've seen what jobs are like. We know what those are. We've experienced it, and this does not have the same taste as a job. No.
Yeah. We have a lot of people that show up that have had rent houses, and they're saying, well, is it like rent houses? And we're no, way less, way less, right?
If it was like rent houses, we wouldn't be talking today.
Yeah. I'm not really good with the rent houses either. I've had all that too. And it really doesn't suit me well. I want to talk about, like, when you're looking for notes, like when you're buying a note, like what's your risk management profile? What are you looking for?
Well, typically we look at the investment to value as a way of measuring our downside risk if something really goes wrong. Then I like to make sure that everybody has skin in the game. And one way that you can do that from a metric standpoint is to look at loan to value to make sure that the borrower feels and knows that they have something to lose if they decide they're going to get goofy and walk away or start to be a problem borrower. So those are some metrics that we look at. Yield, obviously yield is important, but it's not as big of a deal to us as I would have initially expected. Frankly, some of our best investments in performing notes have been ones that probably most people wouldn't have even looked at because they yielded so low. But we bought them at such a substantial discount that we were just willing to sit there and collect the lower yield until somebody decided they were going to move or had a life event that caused them to sell the house. And you watch, those are the ones you watch your servicing reports to see whether or not anybody called in for a payoff statement.
Yes. Yeah. One of the things that people learn when they start learning about notes, for sure, and you saw this, is, your yield, you don't just pick a yield. You kind of you might buy at a range of yields. And so a lower interest rate note, that means you're going to buy it at more of a discount. You can buy that at a lower yield, but you're going to make your yield when it pays off early. Is that what you're saying?
Yeah. And then some.
Yeah.
Yeah.
So that's cool. We see all kind of variety on notes right now in that regard. One of the strategies that is very common for Note School members is they do this strategy where they sell a partial. In other words, they buy the whole note and then they sell the first X number of payments or something like that to really recoup a lot of their capital. You guys haven't done that much.
No, we haven't, but it's a great approach, and there's absolutely nothing wrong with it. It's an excellent method of, spreading your risk, investing more and recapitalizing. We just haven't done that. Typically, I guess we hit the stage in life where we just wanted to, if Cindy didn't want to do that because she didn't want to mix her business with her friendships. I guess I didn't do that because I just don't have any friends.
Well, you've always got relatives you don't care for.
That's right.
Right. No, all seriousness, I get that. And not every student has done that. And of course, you're not giving up your cash flow either, right?
Right.
That's right. And, to further emphasize, it's a good approach. We have actually purchased some parcels in the past, sometimes to spread out the duration or the time span of our payments that we would expect. And then other times, we've had, a couple times a Note School student maybe they didn't forecast their own cash needs quite accurately. And so we stepped in and bought a parcel from them and helped them out. It's a great tool.
I love it. We partials are an integral part of what we do, buying notes from real estate investors, right? And they need same thing. They need some cash flow, but they don't want to go sell their 30 years worth of income. So they'll sell us 10 or 12 years worth of a note. So it makes great sense for all parties, right?
It does.
One of the things that I think would our audience would really like to hear about, right? How hands-off is this?
It's a lot. I'd say that it's the hands-off nature of it is, it's a little hard to calculate because we find it to be enjoyable. So we do not keep track of our time. It's not like a timesheet where you just have to do something. But it's pretty hands-off. It really is. There are days where you get notices that somebody didn't make their payment on time. But it's nothing like what we've experienced with having to report to anybody about anything.
9 years later, I see you guys on Deal Labs. You're still hanging out with us, which I'm honored that you do, right? And people ask me about retiring. I'm 64, and I'm like, Martha would have me doing so many chores at home, Cindy, this wouldn't be a thing, right? I love buying notes,
right?
And so part of it, what people don't really realize is if you have the time, and you guys have some time, then it's time that you don't really have to spend to worry about your, overseeing your portfolio. You just like doing it, right?
Yeah. Yeah. It's like gardening. Yeah. You just, if you're really into gardening, which I'm not, but I tell friends that if I really want to put somebody off, I just tell them I garden, and they don't ever ask me what I do. But it's gardening because, if you have a garden, you spend a few minutes or a little bit of time every day, and it's not overly burdensome. if you go away for 2 weeks and you ignore it, you come back to a patch full of weeds.
Yeah, that's a good point. All right. One of the things that I've always really respected about you is that you did bring some other experiences when you came to Note School. So you guys came from obviously a very structured world, a disciplined world, right? And you brought some disciplines with you. And I want to talk about that. Like, what tools or what strategies do you do to make sure that you got a gauge on what your investments are doing?
Well, from that standpoint, I got to give a hat tip to Cindy. She handles all of the accounting and bookkeeping and the record keeping for the investments. And she does that because, frankly, I don't do that well. We've cross-trained each other, and it has become very apparent that that is not a strength of mine. So she does that. And you tell them a little bit about what tool you use.
Well, we use QuickBooks, and we went to a training shortly after we got into Notes on how to use QuickBooks for Notes. It was specific to that. Yeah. And that has worked very well. So that's, that's kind of my role, my tool and strategy.
That's great.
Brian uses other things for his background that he brings to the and I just try to bug him to give me a receipt every once in a while.
Yeah. That's kind of Martha and I. I'm not very good at the whole bookkeeping thing, but I agree that you need something, and you could outsource that, Cindy. If somebody weren't so good at it as you could still outsource that to be done.
Sure.
No, Eddie, don't tell her that. Don't you tell her that.
Yeah. But the truth of the matter is, you do need something that is a roadmap, right? And that's what you're using it as. It shows you where you're at in money invested and what you've got and what it's supposed to be doing.
Right.
That's right.
Great.
That's exactly.
All right. So, I want to go back to this. How much of a job is it? So everybody wants to know a number. Now, let's just say, Brian, let's forget the deal labs. Okay. Because you're hanging out with the deal labs because we do some pretty cool stuff, and that you don't really have to do that to own a portfolio of notes, right?
You don't have to do that. I do that. I read a lot. I go to the deal labs. I do a lot of things just because, frankly, I enjoy hanging out with creative people that are doing things that, even if I'm not going to do it, I just sit there and marvel that some of these students at Note School are able to come up with creative ideas. And I just like hanging around them.
I do too. And I would do that if I were exactly in your seat. I'm fairly sure I would do it. There's an entertainment factor to that, right? Oh,
absolutely.
But hardcore, Cindy, you're the bookkeeper here. How many real hours a month do you spend overseeing your performing note portfolio?
In a month, probably on the performing ones, I would say 8 at the most. I could probably go a week or two on the performing without doing much and just pull in the information at month end.
Yep.
So I'll go with 8.
But I would add that a part of that answer is dependent upon the number of notes that somebody has.
Well, yeah, that's true.
I mean, we try to maintain a portfolio of, anywhere between 20 and 35 notes in the portfolio. And so that accounts for a lot of that. I mean, if somebody has 2 or 3 notes, it's a different game.
Cindy, I repeat this. I've kind of developed a scale because, as you know, we have a lot of people that have owned a massive amount of rental properties, right?
Right.
And are very sophisticated landlords in that area. And I always say that you can own 1,000 notes for the same time it takes to own 60 rentals. You think that's a true number?
We've not owned rentals, but I would guess that's probably right.
Yeah. I'll guarantee you, if you had 35 rental properties, it wouldn't be 8 hours a month. That is a
fact. Eddie,
just tracking the expenses.
Our family constitution has a clause in it that says absolutely no rentals.
I love that. I love that. All right. So I want to let's get down into your purposes, because this really is where the rubber meets the road. Clearly, you guys are smart investors. You've been with us for years. I tell people, once you're in note, like I meet a lot of burnout landlords, but I don't meet a lot of burnout people that own notes. In fact, almost none. Right.
Right.
Well, there's kind of something to that, right? You know, and so, but that leads us into like where you're going, like why you do what you do. Let's talk about that. Like, what is it? What's your happy zone in life? What is it other than those 8 hours, Cindy, you spend a month performing notes? What is it you like to do?
You want me to start?
Absolutely.
Mm-hmm. Well, I would say that, you know, our why is doing meaningful things. And so we both are active in some charity things. We volunteer quite a bit, various things. So we want to always have margin in our life to be able to do that. And that's frankly what, you know, if in retirement, you have that additional time that you can afford to do those things. So, you know, and our investments are helping to supply income to support some of those efforts, and we get a lot of joy out of doing that, I think.
Mm-hmm.
That's awesome.
And I think when we don't have a job, we have found that we are far more flexible with our timing, so that we can meet with friends, we can do things, help out family members that need something, and we're not confined to being able to say, well, we could help you, but it has to be a Saturday morning. Yeah. Now it can be a Wednesday afternoon and nobody's going to ask anything. And as long as I've got my phone with me, I'm comfortable.
That's awesome. You've positioned yourself well to be able to serve others. And I think that was intentional. I compliment you. You're not saying that of yourselves. I'm saying it. That is something that's an intentional decision that you guys have made.
Well, thank you. We, like I said earlier, I mean, we all have the opportunity to, kind of be a sculptor and sculpt the life that we want. And we try to put a lot of thought into what interests us, what really drives us, and kind of where we want to go. And I mean, even now at my ripe old age, we look down the road and we go, well, what do we want to be doing? What do we see ourselves doing 10 years from now?
Yeah, that's awesome. All right. Looking back, what is it you would have done differently?
Get started sooner.
I'll let Cindy answer first because I'm the one that's made all the mistakes. No,
get started a little earlier, so that we would have had this, kind of laid out for a longer period of time.
Mm-hmm. We got started before we left our jobs, but even with that foresight, we wish now we would have gone back. I've told friends that I wish I would have been doing this 20 years ago, because I just enjoy it. And I like the people that I run into through the note investing. But, that's hindsight. I didn't, but at least I got started when I did. Mm-hmm. And one thing, we've been to, I guess, 9 note expos, and
not COVID.
Not COVID. That's true. But, we ultimately will run into somebody at Note Expo that says, well, they've been a member for about 3 years, but they're still studying it. And I just always listen to them. I think, get going. Yeah. You got to do it. You can study it forever, but if you don't do it, you're not really in the game.
We made some serious drastic changes in Note School over the past 2 years, so that we could leave no student left behind, so to speak, in the fact that we do so much. We have a done for you side that Colonial does, not Note School, but Colonial, our note buying company. And we can do so much for them now. It's kind of a la carte as to what they want us to do. That it really, somebody comes to us with investable capital, it's virtually 100%. Virtually, I mean, something they still have to make the investment, right?
Mhm.
But all the things that were barriers for people to go do this, we've tried to eliminate a whole bunch of them.
Mhm.
Yeah.
And obviously, so we tried to pay attention to what our folks would tell us and stuff. I guess, looking back, if you've been investing in notes for 9 years and you don't have some giant, oh my God, that's pretty dang good.
Mhm.
Right.
Yeah.
So that's really a good thing. I'm going to dig a little deeper, and this is beyond what your daily activities are. What's your why?
We knew that when we left our jobs, we needed to have income in order to live and pay our bills, but also so that we could enjoy the stages of life that were age appropriate and still be able to be generous with other people and other causes. And that was a big, that's really hard to do. You don't just wake up some morning and say, this is what we're going to do. You have to look down the road and say, okay, if we're going to be that kind of people, how are we going to do it? And that became the why for why we wanted to get into notes, because they're not hands off, but they are as close as you can be.
Yeah.
And performing notes are an excellent investment if you put them into an IRA.
Mhm.
Now, have you done mainly IRA investing, or did you deploy money otherwise?
No, we deployed it otherwise. We mixed and matched. We try our best to put performing notes in the IRAs because they throw off income, and that would be taxable income, and now it's tax sheltered suddenly. So it makes perfect sense for that.
Yeah.
We also have some that we will stash into an LLC. They throw off the cash flow that is readily available, and so we put some over into there too. Yes, I know we pay tax on that, but that's okay. That's a trade-off.
That's great. All right, you guys mentioned Note Expo. I'm going to ask you about it. Are you coming to Note Expo?
Indeed, been there for every year that we've ever been involved with Note School. It's an excellent event, and whether somebody's involved in notes or whether they are just exploring it, it's a great venue. We're not sure if Cindy's going to make it this year. We've got her ticket, but she has some girlfriends that are trying to talk her into joining them. And I told her she was going to go to Note Expo regardless. And she says, well, this is part of the flexibility and the balance of life that we were talking about.
You're not a rookie in doing notes anymore, right, Cindy?
Right, that's right.
Note Expo will be November 8th and 9th, and it is, I think, the premier note trade show. Note School owns it, but it's not Note School, and you'll see that. Like, it's not a, there's no hustle to try to get somebody down the way that you have to go do Note School with us. We just want to show people the industry, and we put a lot of industry experts up there, and I'm very excited. I worked on the curriculum literally this morning with my assistant for 2 or 3 hours. So I'm very excited about where we're going and what we're doing. And I think it'll be good. Cindy, if you don't come, you're going to miss something pretty cool, but I don't want you to miss a trip with your friends. You've been enough. We'll give you a pass if you need it.
Okay. Thank you.
You guys are awesome. I respect you guys a lot. I know that there's certainly some correlation that we've seen on both sides between Martha and I's story and you guys' story. And so Martha and I were driving on a long trip not too long ago. We had a little drive, and we were really talking about the same thing, investing time and positioning, the way that the note income does it. It gives us the freedom to go do it. And she helps our kids with various projects and endeavors and stuff along the way. And so it matters. And so what you choose to invest in does get to pick the time you get to go spend on other things.
Right.
Indeed. We want to own the investment. We don't want the investment to own us.
I believe I could write that down, Brian. Mr. Joe.
Yes, yes. So as Ben Hart says, Brian, Eddie will give you credit twice and then he'll own it. and Brian, Eddie and I are your friends. Okay.
Yes.
So you're friends, and if Cindy, you don't make it, you can hang out with us. Okay. You know you won't be alone. Guys, great interview. Wow. Good job. You guys just, you're amazing, and we appreciate you so much. And we certainly look forward to you. Hope both of you, or either just you, Brian, in November.
Great.
It's going to be here in just a second.
Indeed.
True.
Can't wait.
Eddie, any final thoughts?
No, I think they're doing some things well, and they're very humble, meek people in that regard. But they're good teachers, and they've been a good teacher to all of us of how to position yourselves well. So believe me, my wife and I paid attention to what they do, and we've learned plenty.
Yep. Absolutely. And guys, if you check out the slide, we have the information on Note Expo, again, November 8th and 9th. Check that out. And that's it for this week. Another great episode. We will see all of you next week, same place and same time. Have a great rest of your week.